Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the swing trading strategy that made me quit my job. This is going to be for beginners or people that are literally full-time traders. Anybody's going to get something of value out of this. And we're going to be breaking down the strategy that I've used. We're actually going to be talking about a stock that we are in on with a position. So I hope you guys all enjoy it. If you have any questions, feel free to ask, down below. And if you guys want to learn more about swing trading, I highly recommend going on and checking out the Swing Trading Masterclass. It's my school where we talk about how to find these stocks. We talk about the psychology, the emotions, but more importantly, we teach you that this is not a get rich quick. I personally don't believe in alerts. I think the proper way to become a swing trader is to learn and focus on education. Put in those hours to learn a craft. Treat it like a job, treat it like a doctor, a lawyer. Put in those hours, and I really think you'll be in a great headspace. You won't need alerts or anything like that. I think that's super scammy and it's super saturated. Now, never recommend anybody doing that. So check out my school. We're doing a little promotion for YouTube. Code YouTube for 20% off. A couple of spots left for that code. So at least check it out down below. But guys, let's jump into this here. So, all right, starting off with swing trading, trying to quit your full-time job. I know that's a very, very clickbaity title, but I'm telling you, this is the strategy that I've used. I've been a full-time swing trader for over 6 years. So looking back 6 years ago, I definitely think that one of the things that really separated me from other traders was honestly just the willingness to never stop learning and to document my trades. I think those two things, if you have that little click with your mind and your headspace, I really think it will separate you from other traders. And the reason why is if you never stop learning, you're going to be in a great spot because you're going to be consumed by it. You're going to love it. That's what I did. I fell in love with it. And the second thing is documenting your trades, looking at your profits and your losses as not just numbers, but ways to learn, looking at a loss and saying what went wrong, what went right, and this is why I know I have a nice journal. This is the journal I've used. I'll put it down below. And the reason I love it, and you don't even need this journal. You just need a notebook. But, documenting your trades, it will help you work on things that you do right, but more importantly, what you do wrong so you can eliminate them in the future. So I highly recommend, documenting and journaling your trades. I'll put my journal down below. You don't even need it. I'm not even just saying it. I've gotten some questions about it. So I'll put it down below, but you do not need it. You don't need it. You can literally use this. This will do the exact same thing, but if you want something that's just a little more organized, check it out. All right. So let's jump into this here. So with my strategy, what do I look for? Do I just buy any old random stock? No. Obviously, each trader is going to be different. Just how each person is different. Some people are going to want high risk stocks. Some people are going to want low risk. Some people are going to want, day trade. So for me, I'm a swing trader. I hold a position for anywhere from 6 to 9 days on average. And one of the things here with this strategy that I love is it's super simple. For me, I love the expression MISS, M-I-S-S, make it simple, stupid. Don't overcomplicate it. You'll see people on TikTok and YouTube saying, you need 30,000 indicators, you need charts, you need a million different charts. No, you don't need that. You need to understand what you're looking at. So for me, I love to just keep everything basic, and I think that's a great spot. So with this stock here, ARES, what do you guys notice, right? It has this great upward trend. One of the things here, as we look at it, what do you guys notice? As we look at it, you guys can actually see that this stock loves this blue line. Each and every time it hits this line, we get good buying pressure, right? So it hit it here, we got good buying pressure. Hit it here, we got good buying pressure. Hit it here, got good buying pressure. And you guys can see recently it did hit it here, and we did get some nice moves. So for me and my strategy here, we also had this good price support. So I thought, okay, if we can get in near and around 128, that's going to be very a fair price because we know there's good buying pressure there. On top of that, we also have heavy support near and around the 90-day moving average line. So we took a nice trade here near and around this 130 area. The one, I think our average cost was like 131. But anyways, you guys can see hopping in here was near and around that moving average line. We could set our stop loss just below it at about 127. So drawing out the risk and reward here, we can draw it out real quick. So hopping in here, setting our target. There's a couple of approaches you could have with your target. So I like going to the last resistance level. I think that's a very fair price. And so setting your risk and reward and your stop loss just below it, our risk and reward comes to about 3.43. So what this means is for every dollar you invest, you're hoping to make $3.43, which is actually pretty decent risk and reward. And very realistic. We could see this stock going up to like the 139 to 140 range, which is still good, and your target is your target. Like if it's your dream, for it to hit there. It's a very realistic goal that could be achievable if everything goes your way. But sometimes what happens is just things don't go your way. And as a trader, all you got to do is just adapt. And so for me, what I do is it's very, very simple. I use a trailing stop loss. So what this means is as we hop in on this trade here, with our average cost of 131, you guys can see the stock is moving its way up. So what I will do is I will just draw out this trend. Super simple. If the stock breaks below this trend, I am just going to cut my losses. If it gets more buying pressure, I'm just going to move our stop loss up. It's a very, very easy way to catch runners and not miss out on opportunity. And then if things don't go your way, you're still profitable and you still made money on your trade. So drawing that out, right? If that's just a worst comes to worst, right now it dips down below to like 133. Okay, we can draw that out here. So let's just go right here, hopping in at, where do we hop in at? About 131. And selling right here, right? That's a 1.7% return. And I know you're saying, Carter, you will never make money off 1.7%. I hate to say it, but yes, I did. Making 1.7% might not seem like much, but as a full-time trader with a little bit, yes, of a larger account, I get that. So my profit will be a little larger than somebody with $100 or $500. I'm very aware of that. But 1.7% compounded over a year with $500 or $1,000, this is a 4-day trade. So if things don't go my way, which I'm already profitable, so I'm happy, but if things don't go my way, I'm still profitable. And if they don't, I'm still profitable. And the thing is what makes up a successful swing trader isn't these returns of 10, 20, 30, 40%. I'm telling you, if you think that is what makes up a full-time trader, I'm sorry to say, but you're in the mindset of getting rich quick. As a swing trader, you need to take profit because that's your goal. Number two, looking at a 1.7% return as a bad thing is the worst thing you can do, because my job as a trader is to make money, and I made money. You need to be happy. You need to have very, very realistic expectations when it comes with trading in the market. So using moving average lines, using RSI lines, which is this line down here, the relative strength index, super, super important. This tracks momentum. And, if we look at it, we can do it real quick here before I leave. If we look at it, we're hopping in at about 37, which, yes, I know could be a little bit of a not overvalued, not undervalued, but a little more of the middle ground. We personally like it under a 30, right? We like it under a 30. But looking back at the last time I was trading for a 37 was way back in here, where it went from 94 to about 108. So yes, so I think this stock is just a little different when it comes with that RSI. But guys, I hope you guys all enjoyed it. But more importantly, I hope you guys learned something. If you have any questions, feel free to ask, down below. Check out my school, code YouTube, 20% off, and I'll see you guys in there. And we'll see you guys in the next one. Take care, everyone.